was a mixed start for European markets today. In Asia, shares managed to recover from a rather shaky start, but they're still on track for a monthly loss. The dollar, meanwhile, has edged away from recent peaks on expectations from the US Federal Reserve that it'll raise interest rates as soon as next month. Well, for more, I'm joined now by Marshall Gittler, who's the head of investment research at FXPRIMUS. Great to have you on Money Matters. Let's start with that news about Volkswagen. How's the market reacted to its drop in net profits?
The company is really doing very well, all things considered. I think most people are focusing on the problems caused by the diesel scandal, but the fact is the Volkswagen only has about 5% of its sales in the U.S. Mostly it's a Chinese company. A third of its sales are in China. And that was depressed last year. It's doing much better this year. So I think the company's doing surprisingly well. In fact, it's on course to be the largest automaker in the world this year. So I think it's doing very well, all things considered.
Let's talk about Asian markets, which got off to a wobbly start on Tuesday. Is that going to manage to recover?
Well, yes, the Chinese market suffered a flash crash at one point, down 10% and then back up within a minute. But Goldman Sachs announced or put out a report saying that Chinese stocks might be included in the MSCI Emerging Market Index, and that sent the Chinese market up. In the U.S., in Japan, they're talking about delaying the hike in the sales tax, and that sent Japanese stocks up. So they've had a pretty good day all around.
European stocks got off to a mixed start, but unless we have a crash today, May will have been the best month since October. What's driving that?
Well, I think the impact of the ECB's policies are finally starting to feed through. It looks like deflation has bottomed. Loans are rising. These policies are starting to bear fruit, and growth is rising gradually. I think the economic outlook for Europe is looking better, and there's a lot of money sloshing around. So I think that's helping the market a lot.
So would you agree then with the US Federal Reserve that says that global markets appear to be well prepared for a summer interest rate hike?
Yes, it's quite noticeable that on Friday, for example, when Janet Yellen actually confirmed that they might hike rates during the summer, or that a rate hike would be appropriate, the U.S. stock market was up 0.4% anyway. So it shows that stocks have really discounted this idea, and it doesn't faze them. And that's what they need to see in order to go ahead with the move. They don't want to disturb the stock markets, and it's clear that they won't.
Let's talk about oil. US oil prices were lifted early on Tuesday by the start of the peak demand summer driving season. Where do we see this heading?
Well, I think oil looks to me to be capped around $50 a barrel. Yes, there was a big drawdown in inventories in the last week, but crude oil inventories fell, but gasoline inventories rose. It just seems that they're distilling the oil to become gasoline. And I think the market's focused on the supply disruptions, for example, in Nigeria, forgetting that Canada is going to come back on stream. And there's a lot of American potential output that's profitable at $50 a barrel that's going to start coming back. So I don't see really the gains extending very much. In fact, I would say the prices are probably headed lower.
OK, Marshall, thanks very much indeed for that roundup. Marshall Gittler there, Head of Investment Research at FXPRIMUS.